Hi, welcome to this vid day. It's February the 9th. It's Sunday. Just going to give our weekly Forex forecast and pick out opportunities in the market which we think could offer really good risk to reward trades the week ahead. Now, there are plenty of charts to look at. We'll go and take a look at them in a moment. And the last two forecasts have been saying, yeah, a little bit of volatility returning to the markets and some really nice trends and profit opportunities. So it's been a good few weeks, or last 2 weeks especially, been good weeks for Forex traders. Will the week ahead be a good week? I personally think so. I don't see volatility dropping much from here. I think, you could get some decent volatility next week in relation to the coronavirus. I think it's going to start to impact a little bit more on financial markets. And I've just done some notes on this. You can just check out my Facebook page. Now, in terms of the effect in the Forex markets will be to strengthen the dollar, which is already in a nice uptrend, and also the yen. I think the virus actually, financial markets generally been just a little bit too complacent about its impact. Right, now, in terms of all these points and basically looking at trading opportunities, let's go to the charts. But please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member center on the link beneath this video and get a risk-free 90-day trial. Right, let's go and take a look at the charts. Now, I've updated all the charts in the member center, so we're going to use the charts from there. All right, just our member center and the daily market update, and just to our first pair, which is Euro USD. Now, in terms of our view of it, hasn't changed since last week. Euro's going down, and we only see limited rallies. Now, quite a reasonable week last week. It was a week of red, in at 111.80 still. We're at 109.43, so 240 odd pips profit. But still very low volatility in this pair, but upside is limited. We do not see much in terms of rallies. 110 first resistance, then 110.60. Looks pretty good second resistance with its 20-day moving averages and the double trend line. Why limited upside? Well, I feel that with the euro, obviously it's got a negative carry. Okay, so Eurozone negative interest rates, US dollars got positive interest rates. Big institutions will sell it to pick up the carry. Okay. Also, I think, Eurozone, the data now is just pointing to recession. And there had been some optimism about the zone recovering, but I just think that's going to evaporate now. The Eurozone is going to be in recession within months. There's nothing the ECB can do about it. US economy doing okay on the other side, or better than the Eurozone for sure. Also, if we get risk off and that accelerates a little bit, that's going to hurt the euro. So for us, okay, we haven't seen real high volatility yet, but I think it could come. Last week all red, and this level here, we can get through 108.70. I think we can see higher volatility down to 104.50 pretty quickly. Rallies, selling opportunities. Now, if you're bearish of the euro, I've been saying this for a while, good trades to look at are euro correlated currencies, because if you believe the euro is going down, they'll go down quicker. We've had some really great trades in the correlated pairs, which I'll come to in a little bit. But yeah, Euro USD going down. Limited upside, a lot of downside. Let's move to the next pair, which I'm going to cover in a separate video, actually. Not just this pair, but the GBP generally. It's been our big winner over the last few months, particularly taking long GBP commodity currency trades. We're now flat GBP USD. Our last trade on this one is actually a loser. We want to come back in above 129.40. This is major support here. And then we're looking for a move to that spike high and then the retracement of Brexit. I like GBP USD. I'm only covering it briefly here because I'm going to do a full video on the British pound, but I really like the GBP on the commodity currencies. We'll cover the GBP separately, but let's move on to a pair that I think is getting ready for a big move to the downside. It's already a reasonable move. It's AUD USD. So far we're lucky with our entry. I said this in our last video. Nice move down. And now we've got about, well, we've got 300 pips. And are we going to break lower? My own view is yes. Even if we rally, I think we'll run into resistance where I've placed my trend lines just below the 68 level. And 68 level, 20-day moving average should provide really good resistance. Very bearish of the Aussie. I mean, I just want to show you copper, which is something, or commodity you can look at in relation to the commodity currencies generally. It's got hit hard, okay? Bounces from support, but that's just a dead cat bounce, really, in our view. Correction of oversold. And now we're coming down. If we break 2.5, there's no support until 2000. And I think, if we look at the big picture, the coronavirus obviously is slowing the Chinese economy up, even more so. Well, it was slowing up before, wasn't it? So obviously commodity demand from China is going to drop. That's going to obviously hurt the commodity currencies. And, the Aussie dollar, right on support. I just sell her through support. Back to resistance here. I put 63 as monthly support. You can go a bit lower than that. I think the Aussie could trade down to 60, then probably 55. Just getting ready for a big break lower. And I think if you look, obviously Australia's biggest trading partner is China, but if you look at the domestic economy, the way it looks at the moment as well, the RBA are going to be cutting rates. And obviously they've had those terrible problems with the bushfires in Australia. All the risks are to the downside in this one. See limited upside, a lot of downside. Moving to the next pair. This has not really done anything yet at all, actually. It's USD JPY. We've had some luck in selling currencies against the JPY, but this one hasn't moved. We're bullish of the JPY longer term, 109.80 in, 109.75. What I would say is this level here, 110.40, is big monthly resistance. And if it can't be taken out, we break back below the 20-day moving average, probably below 109, I think we'll be off to the downside. I think the coronavirus, it is a serious situation. It's going to get worse before it gets better. I think that could help the yen in terms of safe haven buying, so it should push the dollar down, and the yen for us is just very oversold at the moment. Really good opportunities will come to them in terms of the yen against the commodity currencies. Let's move down to our next pair, which is USD CAD. It's moving up nicely, I suppose. I mean, the volatility, again, not too high. It's near enough 300 pips now, though. So where have we got support? Where are we going to? You got support here, and then 130. 132 is the key level of support. If we can break up through 133.30, we should go to new daily chart highs. 140 is weekly resistance, so long way to go if our view is correct. There is a level in between, 138. I think in terms of the Canadian dollar, obviously a similar backdrop to the Aussie dollar. Commodity prices generally are going to be falling. And we look at crude oil. That's very quickly. I mean, crude oil is really taking a hammering as well. That's a 20% drop. And it's not over. It's probably going down to 30. I mean, the commodity complex going down is going to weigh, obviously, on the CAD. I mean, CAD is an exporter Canada is an exporter of crude oil, but of numerous other commodities. They're all going down. Also, I think the market way too optimistic about the Bank of Canada holding interest rates. The Canadian economy has peaked. The Canadian dollar, in our view, is going down, or the USD is going up. So I really do like the look of USD CAD. Right, let's have a look at some other US dollar pairs, and I just need to get my menu back to do it. Right, we're on the NZD USD daily chart, and in terms of this pair, I've been saying, did a video on it a few weeks ago, saying we expected a big trend to the downside, not just against the USD, but the NZD to fall on a number of currencies. Fairly gentle here, We're now getting a bit more traction to the downside. It's not huge volatility, but I think it's going to get a little bit bigger. And come down to the 64 level, 63.99. If you wanted to sell this pair through 63.80, clear the round number, or back to 65. All the commodity currencies now are going down. I think the Kiwi could fall a bit quicker than the Aussie, actually. And the reason I feel that is both countries have got a similar profile, very heavily exposed to China in terms of their trading or exports. But, the market is very bullish. The Royal Bank of New Zealand will not cut rates this year. They'll be cutting rates this year. Okay. And I think that could indicate that at the meeting coming up next week. If they don't, it's in the price anyway. But that would give the Kiwi an additional push to the downside. I think, monthly support is on the cards at 60. Could even go lower than that, 55. Just now, all the commodity currencies for us are in bearish trends, bounces, are selling opportunities. Right. Let's have a look at a Euro proxy we've been following for a while. It's doing okay. USD SEK. Dollar did have a big sell-off, we mentioned at the time. The dollar been bullish for a good while. Too many specs were long, cleaned out, weekly level of support. We've come off it, worked our way up. I think we're going to chart highs. And this pair, actually, even for fresh trades, looks good. Yeah, you got about 3.5 to 1 to target. In terms of the SEK, look at Euro SEK as well. Euro's going up on the Swedish krona. Sweden got terrible problems. Both currencies, USD and Euro, are going up on it. We've got the target chart highs, and I think we should hopefully get there within a week or two. If we get risk off, it'll be pretty quick. We'll see if we get risk off next week. Let's look at some more pairs. A few more USD pairs, and we'll switch over to some crosses. Now, in terms of this pair, been following it for a few weeks from the 880 level. Now, this is actually a commodity currency. It's the commodity currency of Europe. It's USD NOK, USD Norwegian krona. Norway, obviously Europe's large oil exporter. And I'll use this pair as an example last week in terms of watching more minor pairs for good opportunities or Euro proxies, because this was a great opportunity into 880, big monthly support. Crude oil starting to fall. US dollar nicely to the upside. It's done a rise of 5%. It's a fast moving volatile pair, and I don't think the move is over either. I think we could be going as high as 10. So this commodity currency is really taken a hammering, so to speak. Aussie, New Zealand, and CAD, they're going to get the same, in my view. Right, let's move on to the next pair. It's a pair to keep your eye on, even if you don't trade it. It's USD CNH, so dollar offshore spot Chinese yuan. Now, in terms of here, big support, and we did base out here. We got long, and then we thought, the virus is coming, the USD should really be motoring to the upside, but hasn't done too much, has it? But I've got a feeling if we do break out, obviously the People's Bank of China can intervene in this pair, which I think they might have been doing. If we do break out, though, that would indicate risk off for maybe possible capital flight. I'm not saying it's going to happen, but if we do get a nice big blue through here, we were building up on Friday, we should get up to 720. I think longer term, if we do get traction to the upside, we go as high as 10. But keep an eye on it just for risk on, risk off, even if you don't trade it, in my view. Let's move on to another pair. And this is a Euro proxy. Obviously, USD NOK in motion, USD SEK in motion. This one's just getting in motion, in my view. US dollar Czech krona. Down here was decent monthly support, or good monthly support, down into that double bottom there. Come up, broke the 20-day moving average, which we always like if we're bullish, and then we like it to hold. We always expect it to hold pullbacks if we're bullish. And a nice big blue candle on Friday. I think it's a great buy because, if the euro goes down, obviously CZK will probably go down quicker, or Czech krona. But also we get risk off. We get risk off. The Czech krona is seen as a risk currency. The euro is a bit of a safe haven. So it would really accelerate the Czech krona decline if we get big risk off as well. And I quite like it on the monthly chart. See, worked our way up, holding the 20-month moving average, going to 26 longer term in our view. Long way to go up on. Sorry, a long way to go on the upside. Sorry, I've gone back to the wrong page. Sorry, long way to go to the upside. Target chart highs. Then 26, and that candle tail there looks like exhaustion. Okay, so really good risk to reward trade. Just going to look at a couple more US dollar pairs, then we're going to switch over to the crosses, and this one is USD PLN, which is very similar in terms of background to the Polish zloty, to the Czech krona. It's broken the 20 there, came above it, bounced back towards it, bouncing up. That's going up as well, 420. I think the two can be done as a split trade. Longer term, I think those two pairs give really excellent results. So obviously I do like trading the euro proxies. Just one other pair, because I think this pair is a good example. Here it is. USD SGD. And a lot of people, let's say when they're watching Euro USD, you think, well, actually, is that ever going to pick up in volatility? Volatility could pick up at any time. See, obviously, here was a grind lower, tiny candles in USD SGD, and then you get a nice big explosive move to the upside. Obviously, in terms of this pair, and I still think it's going way higher. You can see my target's 145, then 150. Singapore, a lot of business with China, obviously. China start hurting it. Then, of course, you get the virus come into play. Obviously, a lot of people moving between Singapore and China. Cases in Singapore. Central banks say they might have to cut rates to help the economy and combat the effects of the virus. Nice move up. So never be deceived by low volatility. It can turn to high. Right, now we've done a few USD pairs. Let's go and look at some crosses. I'm going to look at yen crosses because they look really interesting as we come in to the new week. Right, well, the NZD JPY daily chart, and first of the yen pairs I'm going to look at, and yen crosses look really good. Obviously, I've said earlier, I think the Kiwi could take a little bit of a hammering next week. We'll obviously have to see. But this looks very attractive from risk reward point of view. From our entry, we get a nice entry with then gap lower there. Find support just above the 70 level, come back. Now we're going south. 70. If we break 70, straight down to chart lows, and then longer term on to 60. So potentially another 1,000 pips to come. Obviously, if our view is correct, but I think if we break 70, that will confirm a big move down. It's also a sell on the rallies. Now, in terms of the yen, I just don't see too much downside for it at all. You've got a lot of nervousness in the global economy. The yen is also deeply oversold, as I mentioned in previous videos. So I just think the yen getting ready for a big move across the board. So far, this one has been a decent return. I'm hoping it's going to become a really good one. Now, in terms of another pair, I like all the commodity currencies. A short against yen, doing them all, treating it as one trade. Okay. Again, we get a nice breakdown here. Then you get the rally. That rally is coming to the 74 level, a round number, and the 20-day moving average. You can see it there, which we expect to obviously provide resistance if we're bearish, or not obviously, but we do. Regular viewers will know that. So we come up to 74, can't clear the round number through the 20-day moving average down. I'd be a seller. If I wasn't in, again, a lot of potential, another 1,300 pips if we get to our target. Obviously, we've got to get there. These are longer term targets. But yeah, feeling Aussie going way lower as well. Last one, CAD JPY. Down, rallying back to the 83 level, 20-day moving average. We should find resistance here. Going low. You could wait to go through 82 if you wanted. But again, 1,200 pips on the downside. So a lot of downside we see commodity currencies against the yen. One to look out for early next week. CHF I think this looks quite attractive actually. It's a gentler moving pair than the other three. But the Swiss franc is very, very overbought. Found support. We can't test the 20-day moving average through 112, okay? And a lot of downside, and you just really need to tuck your stop back behind this level here. It doesn't, it's a really good risk to reward. Swissy very overbought, just generally. So I really like the look of this one as well. And there's one other one we should look at, which we look at most weeks, which is Euro JPY. So I'm just going to flick over to that. I just need to get my menu back. Where is Euro JPY? Sorry, found it. Okay, so here is the Euro. I think this one could really have a nice run next week, Euro JPY. This up here, 123, was big monthly resistance. We fall, find support into 120, trying to take out 121, can't. There's 20-day moving average just behind. Just let it go through 120, say 119.80. I've written over there, and I think should be running to the downside. I really like the look of this trade. Got chart lows, 110, then 100. Looks a really good risk to reward trade. In terms of the yen, just universally bullish, and they're the 5 yen trades that we've actually got on. Okay, I'm treating basically the commodity currencies against yen all as one trade. So we've got Euro JPY and CHF JPY right, as well. 3 pairs to finish off with, and they all look good. And this one is Euro NZD. Obviously, I think the NZD is going to get hurt next week. Commodity currencies generally, I think the Euro's going up, and I really like the look of this chart. You have the 170 level, give that way there, nice big breakout. Come back, test the level, pushing off the level again. That's going to 174, then 176. In our view, Euro is going up on the AUD and CAD as well, but I particularly like the look of this setup. I'm just going to finish up very quickly with looking at 2 GBP pairs. But I'm going to do a long video on these sometime if I get time next week. I'm just very bullish. Now, this is GBP AUD. Gave us a great profit. We got that big surge up, 800 pips, took off half, took off the other half when we came down this big red, and we've waited for it to test support. 20-day moving average, we've moved up 193.01, 193.30. It's a buy now, so just get through that level of resistance and the uptrend should resume. Pound, we've just done really well at pound against commodity currencies over the last few months. This dip is a great buying opportunity. Last one, we're going to do day GBP NZD. Similar chart formation, up she goes, comes back, test the key 2 level. We're already long, and going up basically to 205, then 215. I think the dip is a great risk reward buy. Also like GBP CAD and another few GBP crosses. I'll try and get a video done on them in the week. In the week if I get time. Week ahead should be interesting. We'll have to see how the coronavirus story unfolds, but I've got a feeling we are going to get some nervousness in the markets next week. USD now looks a really established uptrend, so dips buying opportunities. Yen looking like it's about to really move strongly. Obviously, I like the look of the GBP, and Euro, like the look of it on the commodity currencies. Commodity currencies for us, just great long-term sells. Basically commodity currencies going down. Trying to think if there's anything else I can add. It should be an interesting week ahead. Last 2 weeks have been pretty good. I'm hoping this week will be a good week of trading as well. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.